Joins us from Bell Direct over at the Sydney camera. Julia, good to see you. Thank you. Let's look at a couple of stocks, particularly on our market today, and get a bit more specific. Flight Centre, that one is actually continuing a pretty good run. Some all-time highs in the session today.
We've seen a brand new record for Flight Centre today. In fact, it's been a stellar rise. If we start off by having a look at the 5-year chart of Flight Centre, this is what it looks like. And you can see that from the lows that we saw in 2009 at $4 till today, where we are seeing the price around about $44. It's been a massive 1,000% increase for Flight Centre. I guess if we have a look at the 1-year chart as well, what we have seen is quite good momentum coming through. And just recently, we have seen a key resistance level being broken. Now, this last rise that we've seen in Flight Centre's shares, of course, was that profit upgrade that we saw from the company last week. If we have a look at Flight Centre, it usually has a high correlation with the Aussie dollar. If we have a look at the Aussie dollar, when it falls, it's usually bad news for Flight Centre. However, the earnings outlook is looking quite strong. We are still watching that Aussie dollar and the impact that might have on forward earnings. We have a look at the valuation for Flight Centre. It's looking pretty good at the moment. It's about 19 times 2013 earnings, but it's about 15 times 2015 earnings. So probably a little bit more on the expensive side, but the momentum has been good in Flight Centre and really helped along by that profit upgrade that we saw coming through last week. So watching Flight Centre carefully. Momentum's good at the moment, but we are watching that Aussie dollar to see whether that does impact on Australians going overseas.
Yeah, great point, especially as it's just sitting on 90 cents today. Diversified financials and fund managers, that seems to be a standout. Is that an attractive sector in your mind?
It is very attractive, especially the wealth managers at the moment. If we have a look at some of those wealth managers, some stellar performances coming through. We're seeing Challenger up by 3.1%. We're also seeing Perpetual up by 3.2% and Platinum up by 2.7%. I think one of the things really helping these fund managers and wealth managers at the moment is that we are seeing fund inflows throughout the industry. So that's good news. Not only that, we are starting to see performance fees also kicking in because it has been a relatively good 52 weeks, and that's great news for stocks like BT as well as Magellan Financial Group and Platinum, where we are seeing those performance fees starting to flow through again. And don't forget that there has been a large amount of money in bond, and of course as bond prices fall and yields rise, some of that money is finding its way back to the equity markets. There's still quite a high level of cash and fixed interest, so we should see I guess more of an inflow coming through from that for equity markets as the equity markets does rise. And here in Australia, there's also the superannuation effect, where we are going to see the superannuation, the guaranteed superannuation rate rising to 12% over the next 10 years. So things looking pretty good for the wealth managers at the moment, and certainly share prices reflecting that we're seeing a fantastic performance by those wealth managers and diversified financials on market today.
What do you think's driving the broader market today? Because banks, it looks like it's a lot of the high yield stocks doing very well, but then you can also throw in BHP and Rio. They're having a great session as well. So what's bringing it all together? What's actually, what's driving it?
I think a lot of the drivers for the Australian market at the moment are coming from offshore. So really, the more positive sentiments coming through from things like the European Central Bank, really good news for those global markets and good news for the Australian share market. I guess domestically, we've seen the NAB business condition numbers, and they weren't so good. We did see a negative rating of 8 points, and that's the lowest that we've seen in around about 4 years. So really, we're watching the interest rate decision in August as well, and it does look like the market's starting to price in a higher chance that we will see a rate cut in August. Of course, if we have a look at the Aussie share market today, if I can just bring up a market map, it's a pretty impressive one. What we are seeing is green across the board, but we know that over the last 6 weeks, it's been a very volatile ride, where one day we'll see the market substantially lower and the next day substantially higher, then substantially lower as well. So we're waiting for some of that volatility to subside, to increase confidence coming through from investors. But all up, the Australian market seeing a 3-week high today, and as you can see, lots of green across the board.
Fantastic. Any thoughts just quickly on Tokyo, because that's just currently, it's just picked up even in the last 15 minutes or so, currently up by 2%?
Well, we are seeing the Japanese market, one of those ones that has been extremely volatile over the last few months, and a lot of it is being dictated by the policies that its central bank has, and of course the movement in the Japanese yen. So as the Japanese yen weakens, usually that's good news for the Tokyo market, and as it strengthens, it's usually bad news. So just watching those currency flows very carefully. Of course, around the region, the big read that we have had is out of China, where we have seen those inflation numbers coming in a little hotter than what the market expected. So we did see a read of 2.7%, and market expectations were around about 2.5%. So just watching the economic releases, it is going to be a big one in terms of economic releases, which may affect currency. And of course, the big country and economy that we're watching is the US. We will see the FOMC minutes being released on Wednesday in the US, and they're going to be important because the market is really being driven by that macro by the macro theme of the US tapering. So the market's going to be watching those minutes to get any clues of whether the Fed is thinking of tapering off in September.